FHA is always going to have that upfront fee,
Mm-hmm.
and they'll always have that mortgage insurance premium every month for the life of the loan, unless you put 10% down, and on the 11th year, it'll go away, right? And so ideally what you would want to do is you would want to refinance out of the FHA loan into, say, a conventional loan when you're at 80% LTV, when you've paid down, when you have 20% equity.
Mm-hmm.
You know what I mean, or no? So, once you get to 80% LTV, loan to value ratio, pretty much is just what the home is worth, what you owe on it. You just divide the two numbers, and it's just a percentage. But pretty much it's just comparing if you owe $80,000 on a $100,000 house. That means you only owe 80, right? But it's worth 100. You have $20,000 in equity, right? Does that make sense?
Like left over to pay off?
No. You only owe 80,
Mm-hmm.
$80,000, but it's worth $100,000.
Oh, and whenever you say equity, it's how much it went up?
When it goes up, it's called appreciation, right?
Oh.
When it goes up in value, it's called appreciation. But when it goes up in value, what grows is your equity.
Okay.
You know what I mean?
Yeah.
So, home's worth $100,000, you owe $80,000, you have 20% in equity, or you can look at it as you owe $80,000, which is 80%. This is 20%. If this is 20%, this has to be 80%, right? Because it equals 100.
Yeah.
You owe 80% on it, which is the loan amount. So it's just 80% loan to value, 80% LTV. So pretty much once you get to 80%, once you paid it down or it went up in value, however it happens, once you get to 80% with was that telling you a conventional or no?
FHA.
Well, no, it's not for
Oh,
FHA,
okay.
but for a conventional, let's just say. No, if you were to get to 80%, you're right. We're talking about FHA. You only put 3.5% down, but years later you're at 80% LTV,
Mm-hmm.
but you're only maybe in year 8 or year 10, for example, or even sooner than that. I don't know what could happen, right? It could be 5 years later, but you're at 80% now. You should refinance it into a conventional loan at 80%, which means you won't have your the PMI, which is private mortgage insurance. So FHA uses MIP, which is mortgage insurance premium. Conventional uses PMI, which is private mortgage insurance. They're both just monthly insurance. It's just insurance premium, but they're different names, right? They make it real confusing, man. But
That's how they pay you?
I guess so. But so with a conventional loan,